clearly we have seen outperformance when it comes to General Motors. When you stack it up against some of their peers within the industry, making moves in terms of the cost-cutting space, you look at the guidance, they've been able to raise their profit guidance on a steady cadence here over this past year. I think the big question for investors is whether or not this momentum continues into 2025. What do you think?
Sure. Thanks for having me. We actually don't think this momentum is going to continue heading into next year for General Motors. In fact, last week we cut our rating from a hold to a sell on the stock with a 12-month price target of $45. We have a few concerns regarding General Motors. I think if you look back over the last 12 months, the earnings growth has really been EPS growth has been driven by the buybacks. They announced a big buyback last fall after the UAW strike was settled, and they continued to buy back more stock this year. So it's really been driven by share count reduction that has driven the EPS growth, not necessarily underlying net income growth. The second thing is Mary Barra talked about EV growth. One of our issues with General Motors is that they made a decision in 2020 to shun development of hybrid vehicles. As a result, they currently have no hybrid vehicles available in the marketplace. Hybrid vehicles are the fastest growing segment of the auto market in the US. And so while they've had some success with their EVs, we think the federal EV tax credit will be going away. That's going to really hurt their EV sales. And they've lost out on 4 years of development with hybrid vehicles. Now, earlier this year, they decided that they're going to start developing hybrid vehicles again, but we think it was a big strategic mistake. So we see an environment in 2025 where GM actually loses market share to some of their competitors.
Do you think that the pivot on Cruise and the ability to save on CapEx because of that decision could put a little bit of pressure on your call here, just because of the degree of cost cutting that's going to continue and how that frees them up for other innovation that you may not be pricing in?
Yeah, I mean, another one of our issues with General Motors is the credibility of management. If you look back as recently as last year, they said that the Cruise business they thought could generate $50 billion of annual revenue by 2030. And now just last week, they've decided to discontinue the Cruise robotaxi business. And so I think, looking back, I think that's a real black eye for management of the company, to be making those kinds of forecasts. Just an incredible $50 billion of annual revenue is incredible. And if you look back, they've spent about $10 billion on Cruise. And it's been a huge waste of capital, in our opinion. Now they're deciding to exit the robotaxi business altogether.
Yeah, but it looks like at least some of the strategy that they have laid out, at least over the last year, is resonating clearly with investors when you got a stock up just about 43%. Garrett, let's talk about another name that's obviously garners a lot of the attention within the industry, and that is Tesla. We've gotten more bullish calls out this week. Dan Ives over at Wedbush being one of those, just talking about the new market cap milestone that we could see here from Tesla in the new year. I'm not sure you're totally on board with this. What are some of your biggest concerns when it comes to Tesla in 2025?
No, so we are on board. We have a buy rating on the stock. We had been at a hold. We went to a buy the day after the election, and since then, the stock is up almost 90% in just a little over a month. It's been, about 6 weeks. It's been an incredible run for the stock. I think the stock is pricing in a much easier regulatory environment for autonomous driving. And we think Tesla has the best technology out there, and they're really going to be the biggest winner from that. We've heard the President-elect Trump transition team talk about how that's one of the number one priorities of the U.S. Department of Transportation is easing the regulatory framework to make autonomous vehicles a reality. And so that's really the future of Tesla. And if they succeed in doing that, that unleashes a enormous market opportunity for Tesla. And in the meantime, they continue to improve the full self-driving product. Version 13 just recently launched with significant improvements over the prior version. You're really seeing their efforts incorporating AI into their development has really improved the product over the last year or two. So
Yeah.
we continue to like the stock.
Garrett, the reason why I said that you weren't really on board was when it comes to the first thing that you have in your prediction list is that it's going to fall short of its 2025 vehicle sales growth guidance. And not just fall short. You see volumes growing only 10 to 15%, which is about half as strong as the guidance. Why then are you not more concerned about that?
Yeah, so that's one of our predictions. The report we put out a couple weeks ago is that Tesla will fall short of this 2025 vehicle sales growth guidance of 20 to 30%. However, I think important caveat in that prediction is that if they continue to make progress towards getting approval for fully autonomous vehicles, that's really what's going to matter more, and we think investors will be forgiving if they do fall short of that guidance. We have seen in the past many times where Elon Musk, makes a prediction or is too aggressive on his timeline as far as when things will come to fruition for the company. But eventually he gets there. It's just not necessarily in the time frame that he originally said.
All right, Garrett, we got to leave it there. Thanks so much for joining us this morning.
Thank you.